Hello everyone, good morning guys. Welcome to the next video on how to identify trends. Today's topic is extremely important because whenever you are trading, the first and foremost important thing is that how to identify trend. What is the trend? Okay, and which trend the particular stock or index, could be Nifty or Bank Nifty, is in. Because 99% of your trades should happen in the direction of the trend, and majority of the people are losing huge amount of capital majorly because they are going against the direction of trend. Okay, so let me first explain you how the chart is formed, how the particular price movement on a chart is being formed, and then I will explain you how to identify the trends, and finally I will tell you what is the time frame that you should be using for position trading, okay, for intraday trading. Under position trading, we'll be talking about short term, medium term, and long term. Okay, so what is the time frame that we should be using while doing our analysis for intraday position trading? That is short term, medium term, and long term. Okay, so I'm going to explain you with using whiteboard. Okay, because I thought this will be very helpful for you to keep track of your notes. Okay, make sure that you make maximum notes possible so that you can actually revise it on and off, okay, every single day. So let's go to the whiteboard. So trends, there are three possible trends. One is uptrend, the second one is downtrend, okay, and the third one is sideways. Okay, so uptrend, downtrend, and then something moving on the sideways, not upside or not downside, okay, sideways. So, but does a particular stock price go like this, only like this? No, never. It's never a straight line, okay. It will be going, okay, in a zigzag manner. Okay, so how is a zigzag manner happening, and how to identify uptrend or downtrend or sideways, we will discuss further. Okay, let me tell you a situation. Okay, let's take a situation based on which I'll tell you how the price movements happen on a particular company also. Okay, we have been in stock market, we have been seeing so many companies moving in different ways, right? So keep on, it moves in various patterns. Okay, first let's understand how this price movement is happening. Okay, this for new traders. Okay, this can help you a lot. So assume that, let's take a real-time scenario. Assume that you are in a town, okay, and you are planning to do some business. Okay, so during this lockdown, right? So one of the most common business which people have started is, say, the most important necessity, which is either the mask, face mask, or the hand sanitizer. Correct? So let's take that you are planning to do a business of having a retail shop or doing distribution for hand sanitizers. Okay, because everybody needs that to be safe. So in your town, say there are 10 people, 10 distributors in your town. Okay, and you are one of them, and you are trying to actually get products from outside, and you will be selling it to the people or the retailers. Okay, so, and let's take that one hand sanitizer bottle is costing you, like you are selling it for 100 rupees. Okay, so while you're doing this business, okay, so there is something called demand and supply. Demand and supply. Okay, so in your town the demand is very high, okay, and there is enough supply. By 10 distributors you are able to do enough supply. Okay, supply is also good enough, supply is also high, demand is also high, so, and you are able to sell the products on a regular basis. Suddenly, okay, one at some point, right, okay, because of lockdown has happened, suddenly a lockdown has been implemented, and there are 10 distributors, right? 10 distributors are there, and majority of the distributors, okay, say they did not have the stock because of lockdown. Okay, and the stock is also over, they were not able to get new stock. Okay, at their place, and assume that you are the only one who got all the stock in place. Okay, you just got the stock, and because of lockdown, other people were not able to have their fill their stock. Okay, and because of which you are the only one who is having the product. Okay, which is very much necessity. Now what happened? The demand is still the same, but the supply, that is 10 distributors, okay, assume that 8 people did not have the stock. Only 1 or 2 are having the stock. You and one more distributor. The supply has come down drastically. The supply is very low, but the demand is very high. Demand is still the same. Everyone needs that. Everyone needs hand sanitizers, right? But the supply has come down. Okay? And assume that for example's sake, there's no MRP, no maximum retail price. Assume for that, for example's sake. So what will happen here? When the demand is high for a particular product and the supply is very, very less, okay, people will be willing to pay higher price amount for the same product. Okay, one person will say, hey, I'll pay you 110. Another person will say, I'll pay you 130, because they want that product and they know that the demand is so high and supply is very, very less. So it will be like more like auction, with people be bidding, or people be willing to pay more price for the same product, okay, trying to own that particular product. So why is that I'm saying this? This is similar, this is very much related, this particular example is very much related to the stock price. Okay, assume that you are planning to invest on a company, and you see that the company has a huge growth potential. Okay, they are trying to expand, they are talking about, they are in the very good industry. Okay, they are trying to expand, okay, in various countries, and they are trying to actually come up with new products and so on, and you are feeling that this particular company has a huge growth potential, and you know that when the company is growing, the share price also grows along with it. Okay, so which can help you get lot of capital gains, profit. So what you will do, okay, what people who actually saw that particular opportunity will be willing to pay, okay, good amount of price, not because they want to hold it for a longer period of time. They want to hold on when the company is growing, so the share price also grows, so their own capital also grows along with it. Okay, that is what people want to do. So let's take the example. Okay, say okay, let's take this example. Say 100 is a share price of a particular company. Say 100 is a share price of a particular company. Okay, and you are expecting to have a huge growth potential. Number of products are huge, and you are expecting that they are also expanding to other countries, and they can grow very fast. So, and the industry is also very important, okay, in today's world. Say you are expected to grow very fast. So all the buyers, what will happen? Buyers will be coming together, trying to actually buy whenever there's a possibility, because there's a huge demand for that particular company. So assume that too many buyers are coming and they are pushing the prices to say 110. Okay, 110. So almost like 10% increase. So some of the people, okay, some of the people who are holding the positions will be thinking that, okay, already it has gone up by 10%, and I'm feeling that it is going to actually just gone up by 10% very quick, and they'll be feeling that it can drop now. Okay, so they'll be booking profits. They won't actually sell their positions because they think that it is not going to go in the upward direction. Few participants will try to sell. Okay, and then a correction forms. It comes down. Correction forms. Say 5%. Say it is at 105. But the people, majority of the people who are expecting to have a huge growth potential, okay, will take an opportunity whenever there is a fall. Whenever there is a fall in that particular company, they'll come and buy. They'll come and buy. We'll say, right, buying on dips. Okay, whenever there's an opportunity to buy, okay, and it has a good value, most of these are big people who want to keep on buying, okay, for the huge profit that you're going to get after a few months or a few years and so on. So people, majority of buyers are there who are trying to buy here, pushing the prices in the upward direction. Okay, say 120. 120. So again, a group of people will be there who are thinking that, oh my god, now it has increased by 20%. Okay, and they want to book their profits. They will try to book their profits and sell the particular stock, their shares. Say it is coming to say 115. Again, the major buyers, okay, the huge buyers who are there will try to buy the stock, okay, pushing the prices to the next level to 130. Again, some more sellers will be there who are trying to book profits, okay, pushing the prices down, say to 125. Okay, and again, major buyers, big buyers will come and actually push the prices up to 140. And then some correction to 135. And then say to 150. So what is happening here? Okay, whenever there is a correction, big buyers, okay, people are able to understand that people who are actually having huge hope, huge confidence on this company are coming and buying the stock, pushing the prices to the next, okay, pushing the prices to the upward direction, okay. And then whenever there's a new level, right, which is happening, some of the people will always be there who are scared or who want to book profits, which is also good, okay. They will book their profits, and during that selling stage, there will be small correction. That's the reason you'll always be seeing company. Okay, that's the reason you will always be seeing company moving like this. It is never like this. Okay, in some cases this can happen for a few days. Okay, you might have seen in small cap and mid cap companies, but majority of times, yeah, it is never a straight line. Okay, it is always like moving the upward direction, then some correction, moving upward direction, some correction, momentum correction, like that. Okay, so what is this? This whole movement, okay, what do you call this? This is in the uptrend right now. Okay, so I'll give more on that, but we will see the downside also. Okay, so now we are at 150. Now we are at 150. Say from 100 it went to 150, and now as it is going, now it is like 50% upside, right? It is now 50% upside. Okay, assume that most of the people now are feeling that okay, it has gone up by 50% within a very short period of time, and most of the people who are holding the stocks are scared, okay, that what if it drops and so on. Okay, so assume that it has dropped to some level, say 140. Okay, whenever it drops, there will be some buyers who are still going to buy, correct, expecting it can go in the upward direction. There's always both sides, guys. There will not be only buyers or only sellers all the time. Okay, there will always, only when a transaction happens, only when both buyers and sellers exist. Okay, so there will always be buyers and sellers. So when it is falling, okay, at some point, right, buyers are going to keep buying, thinking that it's going to go further upside. Okay, gone up, but it did not go further up. Okay, then assume that from here sellers have come into picture, okay, pushing the prices down, pushing the prices further down. Okay, because sellers saying that okay, it is already too high and I feel that it can go further down. So what is happening is that more and more sellers have come into picture and less of buyers. Okay, so when people, and also buyers who are already holding the positions here, okay, are also selling their positions or quantity, whatever they are holding, okay, pushing the prices further down. So here buyers were leading, here sellers are leading. Okay, say it is 145. Now more and more sellers have come into picture, pushing the prices down, say to 130. Okay, and then some people will be there, okay, it has now fallen to 130, now it is going to go up. There will be some people, like here it happened, okay, from 120 to 115, 130 to 125, I told you, right, some people will be there thinking that it's now going to fall and pushing the prices down. Like that, similarly, here, from 130, some of the people will be there who are thinking that now the price is going to go in the upward direction and they will buy, okay, and push the prices up. Okay, so here, okay, here, that is a point where I'm saying like some of the buyers will be coming to push the prices up. After some point, again, sellers come into picture, pushing the prices down. Say this is 140, this is 120. Okay, again at some point, buyers are going to come, pushing the prices up, down, and so on. Say, same process. Okay, so there is a whole pattern on how price movements happen in any stock. Okay, this is all based on demand and supply. During this particular moment, it is going the upward direction. Who is actually controlling it? What is the thought of the people? People are thinking that this particular company has a huge growth potential and it has a possibility to go further up the upward direction. So people are more and more, whenever they are getting an opportunity, they are buying more and more stocks, more and more quantity. Okay, so the demand is high during this phase. But during this phase, what is happening? People are scared. Okay, people who have bought the shares here are worried whether it is going to fall and so on, and slowly few people started to sell. Okay, they started to sell. So what happened here? The demand started to fall. Okay, demand started to fall. People are worried and they are trying to close their positions, and that is when sellers are coming to picture, closing their positions. Okay, the buyers here are the sellers here. Okay, major of time, right? The buyers here who bought here are the sellers here who are trying to close their positions. So what is this? This is what we call as uptrend. This is what we call as a downtrend. Okay, downtrend. And who is actually in power here? Okay, buyers. More and more buying is happening during this phase, which is helping the company price to rise in the upward direction. Here, more and more sellers are coming to picture, pushing the prices down. Okay, so here it is sellers. Okay, so how to identify whether it's an uptrend or downtrend? So now I think you've got the understanding about how the price of the stock moves. Clear on that, right? So now let's move on to the next one. I'm going to explain the same graph. Okay, so now let's consider this is a low. Okay, this is a low. Guys, listen to this very carefully because it's going to help you when you are doing your real-time analysis. This is a low point. Okay, this is a low point. This is a high point. Okay, this point is a high point. This one is, when compared to this is a low. When compared to this point, there is a low. But when compared to this, there is a lower high. So higher low. Okay, when compared to this low, this is a higher low. Okay, so now let's move on further. What is this point? There is a high point. Okay, when compared to this one, there is a high point, which is high. Okay, but when compared to the previous high, is it a higher high? When compared to the previous high, this is a higher high. Okay, so HH. Okay, what is this? When compared to the previous point, this is a low. This is a low when compared to this. But when compared to the previous low, this is a higher low. Okay, higher low. 105 is 115. Higher low. Now let's move on further. Here, what is this point? This is a high point. When compared to this is a high point. But when compared to the previous high, this is a higher high. Okay, we'll be talking about two highs, lower high, higher high. When compared to the previous high, this is a higher high. Moving forward, it's coming down. So when compared to this is a low. But when compared to the previous low, okay, this is a higher low. 115 to 125. Okay, is a higher low. Same way, this is a high. Compared to the previous high, it is a higher high. This is a low. Compared to the previous low, it is a higher low. And same thing, higher high. Okay, this one, higher low. Now listen carefully here. Now there is a higher low. Now it has gone the upward direction. It has gone the upward direction. What is this? When compared to this is a high. No doubt, right? When compared to this is a high. High. But when compared to the previous high, this is not a higher high, this is a lower high. Okay, this is 150, this is 145. It is a lower high. When compared to the previous high, this is a lower high. Same way, this falling down. This is when compared to this point, this is a low. When compared to the previous low, what is this? This is not a higher low. Here we have higher lows, higher lows, higher lows, higher lows. Here, this particular point when compared to this is not a higher low, this is a lower low. Okay, 140, 130, lower low. This one is a high. When compared to this high, it is a lower high. This one is a low. When compared to this low, this is a lower low. So higher lows, lower lows. Lower highs, this is also lower highs. Okay, lower lows. So what is that we understood here? Uptrend. In uptrend, what you can expect? You can expect higher highs and higher lows. Okay, higher highs and higher lows. If you see higher highs and higher lows like this, then we call it as an uptrend. Okay, higher low, high, higher low, higher high, higher low, higher high, and so on. Higher highs and higher lows is uptrend. Okay, that's the reason we told you right earlier. This is a uptrend. This one, in this phase, okay, higher low, okay, lower low, lower high, lower low, lower high, lower low, lower high. So in downtrend, we'll be having lower low, lower high. Okay, lower high, lower high, lower high, lower high, lower low, and so on. Okay, so identifying trends. Okay, uptrend it is higher highs and higher lows. Downtrend it is lower highs and lower lows. Okay, guys, this is crucial step on your trading because I feel that this is a first step. Okay, whenever you are trading, this is the first thing that you should be looking at. What is the trend? Why is it? Because you are not supposed to major of the times you have to go in the direction of a trend. You have to avoid, okay, taking decision against a trend. Because let me tell you, in an ocean, right? Okay, assume that you are trying to swim against the tide. You are trying to swim against the tide. Okay, one thing you have to put extra effort. Okay, continuously you have to keep on putting effort in order to swim. Even if you are taking a small pause, then the tide will push you in its direction. Okay, and you'll have to push yourself again, right? So after putting a lot of energy, right? Okay, you cannot take breaks, or you have to keep on giving effort. Okay, that's a one which you are going against the direction of the trend. Okay, second one, if you are swimming in the direction of the tide, even if you are not putting any effort, the tide is going to take you in the direction. Okay, you can actually move faster. Okay, if you are putting effort, you can move faster, and most of the time you don't have to put much effort when compared to the swimming against the direction of the tide. Same way, when you are going in the direction of the trend, okay, assume that, for example, uptrend, market is going, one particular company is going the uptrend, and you are taking a trade in the direction of the trend. Most of the time, if you see, the price movements will be very, very fast. You might have seen companies, okay, moving like sometimes it will be moving like 10%, 15%, 7%, like that. In one single day, I'm saying. Why is it happening? Most of the time, it happens in the direction of the trend. Okay, and that is the reason, that is where you can make more profits within a very, very short period of time. Okay, and this is very, very important for when you are actually applying your strategy. Any strategy that you are applying, this is the first thing that should be done. And then you can apply the strategies, because this will help you make a lot of trading decisions with a lot of logical reasons. Okay, the reason is that most of the people who are losing a lot of money is because of this. Okay, most of the money is locked here. Most of the trading is happening in this particular phase. Most of the trading is happening in this particular phase. I'm meaning the correction phase. Okay, this one, correction phase. Okay, so when this is happening, right, what is happening is that the movement during this phase will be very slow. Normally the price movements, right? Normally it will be very slow. Okay, and if you are going the downward direction, thinking it is going to go in the downward direction, okay, suddenly when the trend is reversing, when the price is reversing in the direction of the trend, when the price is reversing in the direction of the trend, the movement is going to be very quick, and people can end up losing a lot of money also. Okay, lot of people, this specifically I want to tell you for people who are doing intraday trading and short-term trading. Okay, always make sure that you are in the direction of a trend, because intraday traders or short-term traders used to focus on very small time frame, correct? 15 minutes, 5 minutes, and so on. So in that particular time, right, when you're doing that, you forget about the overall trend that the company is. Okay, Nifty or Bank Nifty, anything that you're doing, you have to actually focus on the bigger trend. What is the trend, and am I in the direction of the trend? Because that is where the major profit potential is there. Okay, so do not get into the correction phase. Okay, when you're taking a trade, make sure that it is the direction of a trend. That way you can avoid losses first, save your capital, and then you will be able to take trades in the direction of the trend, which can have a huge profit potential. Okay, this is on identifying the trend, uptrend or downtrend. Clear, right? So now I'll be talking about the time frames. Okay, time frame which is going to help you. Okay, what time frame should a person use in order to take a trade on intraday position, short term, medium term, long term? Okay, let's go into that. So now let's look at the time frame that you should be using. Okay, so time frame. So in chart, right, for people who are new, in any chart you will see there's a time frame where you will be having 1 month, 1 week, 1 hour, 30 minutes, 4 hours, 2 hours, and so on. Okay, so we'll be using different time frames for different purposes. Say for example, you are a person who wants to do long term. Okay, so I'll be telling you what I'm using right now. Okay, all the time when I'm doing intraday or short term, medium term, or long term. Okay, so long term, what we normally do, we want to buy something and hold it for a longer period of time. Okay, and that's the objective. So first thing we will be doing is that how the company is, how is the company as a fundamental. Okay, based on fundamental analysis, you can use a lot of maybe annual reports or screener.in. lot of things are there in order to understand the fundamentals of a company. Okay, above that, right, I'll be doing technical analysis also on them. Okay, applying the same strategies or methods in order to identify whether there's a opportunity right now for me to buy. Okay, so long term. So what is the time frame that I'll be looking for? Okay, time frame I'll be analyzing on is 1 month time frame, 1 week time frame. Okay, monthly time frame and weekly time frame. Okay, I'll be checking on monthly and weekly in order to understand whether there's a very good opportunity for me on this or not. Okay, that is on long term. Say medium term. Okay, medium term or short term to medium term. Short term, okay, or medium term. Okay, we can look for 1 week, 1 day. Okay, say for example up to 3 months. Okay, I want to hold it for 3 months, say like that, 3 months and above. So 1 week and 1 day. Okay, because we need to know what is a trend that this particular company, it could be a company or Nifty or anything. Okay, commodities also. Okay, what is the trend that this particular company is moving? Okay, and in 1 day time frame, you can actually use it for better entry, identifying a better entry, because you cannot buy at a very highest value. You have to actually buy at the proper entry so that your risk to reward will be properly managed. So short term and medium term will be going for 1 week and daily. Okay, weekly and daily time frame. And then say can say very short term. Okay, so very short term. Very short term. Say I want to buy today and hold it for say 3 days, 1 week, 10 days, 2 weeks, 20 days, like that. Okay, within a month. Say buying and holding for from 1 day or 2 days to say 20, or within a month. You can go for 1 day, 1 hour time frame. Okay, 1 day time frame, 1 hour time frame. Okay, because these two will help you, okay, to get the understanding about the trend. Okay, 1 day identifying the trend, and 1 hour is going to help you in getting the right entry points. Okay, buying price, all these things can be done effectively in 1 hour time frame, right? This is on a very short term. Say you are going for an intraday. I just want to do only intraday trading, nothing else. Okay, if that is a thought that you are having, then you can go for, say, it's better to actually start with 1 day. Okay, 1 day, 1 hour, to get the understanding about the trend. Okay, but your entry lies in 15 minutes and 5 minutes. Okay, your entry lies in 15 minutes and 5 minutes. Okay, some people go to 1 minute also, but I don't prefer, because there'll be a lot of noise and it lead to a lot of emotions. Okay, so in intraday, right, if you're looking for intraday, look for 1 day and 1 hour for identifying the trend. Okay, just understand what is the trend that it is going. Okay, is it uptrend or downtrend in this time frames. Okay, and when your entry, okay, which time frame am I supposed to take while buying or taking the entry is, could be 15 minutes or 5 minutes. Okay, 15 minutes or 5 minutes. Don't go below this, because there'll be too much noise, too much fluctuations because of volatility, and that will only confuse you. Okay, so do not go below this. Okay, 15 minutes and 5 minutes. Okay, this can help you to actually give a path. Okay, which time frame should I use for what purpose? Okay, this is a time frame. This is a time frame I normally follow for taking my trades. I trade in intraday, short term, medium term, in commodities, currencies as well. So I use this time frame. Okay, start using them, practicing it, because not get into real time straight away. Anything new that you're practicing, start practicing using paper trading, only paper trading. Once you get the confidence, then get into real time with small capital. Start with small capital, then you can increase the capital. Okay, so now you have seen how to identify trends. Make sure that you're practicing it, because as a first and most important thing you have to do before getting into, while starting your analysis. That's the first thing to start your analysis with. Okay, once you identify the trend, major trade or 99% of your trade should go in the direction of the trend. Okay, and then what is the time frame based on the situation, whether you want to go for long term, medium term, short term, very short term, intraday, depending upon the situation you can choose the time frames. Okay, and then accordingly you can trade. Okay, so hope you have learned a lot. Okay, I'll be putting some of the practical scenarios on how to apply the trends as well. Okay, I'll be showing you practically in graph candlestick patterns how to apply these trends. Okay, how to identify the trends, so that you will be able to understand even more better. So yeah, thank you.